What's up, traders? Welcome to this week's episode of the Weekly Watchlist, where I do a technical analysis and give you my thoughts on the tickers listed up above. We'll of course be checking in on our broad market, notably some monthly charts there. We've got our core list of companies that we're always watching, and this week I've got 3 additional trade ideas to share with you towards the end of the video, so definitely stay tuned for that. As always, anything we are associated with is linked down below in the description, and without further ado, let's jump right into these charts. Kicking things off on the SPY monthly time frame, talking about candle structure and location as we always do. For structure, we certainly have a bullish hammer candle. It's very important to make the distinction that we have a green hammer as opposed to a red hammer. Let's talk about the differences now and the more significant bullish implications. Of course, the lower wick, the same in both instances, is produced by some selling activity, but from there, the buyers push it higher to the opening print, in the case of a green hammer, through the opening print, expanding the monthly range, and then we close it strong up at the highs of that monthly range, whereas opposed to the red hammer, you can see that the range is already in place, and just from the lows, we closed more middled inside of that monthly bar. So to me, much stronger bullish implications from the green hammer here on our monthly time frame. So for a structure perspective, the bulls are definitely going to take the win there. From a location standpoint, you can see that we do have a month-to-month higher low and also a month-to-month higher high. From here, we can also take into consideration that we now have 3 significant lower wicks all stacked up in the same area. So to me, there's participation on the long side at this prior established area of support. The fact that we were not able to close a monthly bar underneath that level strikes me as being fairly bullish. So the next sort of objective of the monthly time frame would be, can we take out these roughly equal highs? They're not exactly equal, but roughly equal highs. Can we close a monthly bar above and then just continue to see trend continuation to the upside? A useful little exercise here would be, say you saw this exact setup happening on something like a 5-minute time frame chart. What would you think about it? Is it bullish? Is it bearish? I would certainly have to argue that it's bullish, right? We're starting to form bull flag consolidation, multiple long lower wicks indicating buying pressure, hammer candles, whatever you want to call them. The next setup would be long over the highs, looking for the equal high, if not continuation further after that. So on the monthly, why would we make it any different, right? To me, this seems to be a fairly bullish chart with a reasonable pullback that's starting to resolve back to the upside. Let's continue on down through the time frames to the weekly, and what do we see here? Certainly a little bit of a different picture. We do have a bar to analyze that's an inverted hammer, right? That carries much more bearish implications with sellers hanging out in that upper wick. Is it the end of the world, though, is the question that we need to answer. So for structure, the bears kind of take the win here. However, in a location standpoint, I think the buyers take the win, right? You can clearly see we have a week-to-week higher low, a week-to-week higher high, and more importantly, we've taken out this prior weekly double top in here, which more importantly is also the right shoulder of this head and shoulders pattern. So the fact that we no longer have the opportunity to produce a lower high underneath that, that's obviously can't be a possibility as of right now, it's negating the head and shoulders pattern. So I don't really think that the weekly is poised in all that bearish of a location. If we remember also that we've rallied all the way from the lows up to these highs without any weekly pullback, without any weekly consolidation or daily consolidation for that matter, it's not the end of the world here to start to see this inverted hammer. Could it lead to some pullback? Yeah, absolutely. As we discussed in last week's video, we might expect that momentum starts to slow down to the upside, and that's exactly what kind of happened over the past week or so of trade. So let's continue to drill on down to the daily time frame and talk about tradable levels into the upcoming week. What are we seeing here? Well, the primary objective of this chart, I would say on the daily, is where does the pullback become reasonable as a long-sided entry? We know that momentum here has been absolutely monstrous to the upside. The move has been nonstop, bar after bar, forming higher high, higher low, and we're finally starting to see a little bit of profit taking or pullback essentially in the market. Notice that the Friday candle is a hammer candle. Notice that it's supporting right at this area that we had mapped out around 450.25. To be exact, in my prior videos, it was 450.31. You can go back and see it. Nonetheless, I've just rounded it off to a nice easy number there. Prior highs, then acting as support and support. And if you make pretend with me for a second and we extend it to the left, it's also this shelf of resistance right here. So this to me strikes me as a very healthy, very modest pullback in an overall very bullish market. Now you may be saying, well, hey, look at volume and how it picked up on the Thursday afternoon sell-off. you're right. However, I would argue that that is going to become liquidation break and just the worst possible location for longs, those who longed up here on the gap up from Tuesday, closing their position as they didn't get paid, right? Let's talk about that psychology actually now and how this may resolve. So on the gap higher, right? You get people who saw this entire move higher. They were sort of sitting on the sidelines. They thought, okay, it's gapping up. It's got to continue higher. That's fine. If they built a position on the open or at any point in the day as we pulled back, fine. They essentially need follow through over that Tuesday range high to get paid on their position. What happened on Wednesday? Nothing, right? Sideways. They did not get paid. So they're starting to feel antsy. They've been in the position one day already and nothing's working out for them. What happens on Thursday, right? We kind of go sideways for a majority of the day in the morning, just inside of that range. If they start realizing, hey, it's not going to be rainbows and butterflies, we're not going to be taking out that Tuesday high today. If they all start closing at the same time, or there's a chain type reaction that indicates to them, hey, we should all start closing out of this position. And obviously, there aren't groups of people just, hanging out, all conspiring to do the same thing all at once, but you get the gist, right? As these longs with poor trade locations start closing, leads to that spiral to the downside. This to me is no more than what I would like to classify as liquidation break, but in terms of market profile, we would call that a spike, right? We didn't really know whether or not those prices would be accepted or not. As of right now, we've basically accepted them and we've failed to go lower. On the 30-minute time frame, you can see that we do have an inverted head and shoulders. We did close above that neckline. If we can get back to the scene of the crime, aka the top, that would prove that this is liquidation break and this is not stronger selling activity in the marketplace. So some levels to pay attention to. We of course want to see this hold, worst case scenario now going forward, at 450.25, 450 quarter. If we can get back up to the spike top here at 455.85, I do imagine that's a bullish implication. And then if we can recapture that and put in a higher low above that level, that to me would indicate that this is all the pullback we're going to get and it's going to be back off to the races. So that's my thinking in terms of psychology and positioning here on smaller time frames. Back to the daily to talk about some other levels that could potentially be in play this upcoming week. Obviously, if we take out the highs here and it's back off to the races, our next target is going to be from this pivot high around 473 round number. Okay, from there it's just all-time high, right? That was the first significant lower high that we saw in the SPY. So that's the first target. It's a little bit of a stretch to assume that we're just automatically going to go there this week, but it could be on the table sooner than later based on everything we just discussed and the fact that this is not necessarily stronger selling activity. If we do happen to take out this 450.25 level, what's my ultimate line in the sand for the week? I really don't want to see it underneath 441. Why is that the number? Well, if you start looking at this as a rough double bottom, make pretend with me and again extend that to the left, it's the neckline of that overall pattern. You could make the argument that 437 might be a little bit more important with all of these touches, but I like how it, that first day of consolidation here after the three large green bodies, that's the level that held, that's the prior high, right? So I like that level at 441. That would be my line in the sand in the upcoming week to remain bullish on this pullback so far. Let's quickly see how that aligns with Fibonacci's, if at all. So we'll come in from the lows up to the highs, and your 441 is just above the 50% and just below the 38.2. Again, we always opt for structure and not just blindly following the fibs. So 441 sounds reasonable to me based on that perspective. Of course, we also have this area at 446, which could also provide support. So those are my downside levels, but we've walked through why this could potentially be the start of a reversal if we get any acceptance back above 455.85 on that smaller time frame chart, like the 30-minute or the hourly. Okay, so those are my levels. Those are my thoughts on the SPY itself. Let's quickly take a brief glance at our sectors and see if these are confirming or denying the price action so far. In the XLRE real estate, this is higher, which is not the best indication for the marketplace, more of a defensive asset class, right? So if the SPY does start to move higher, you want to see this remain in balance or potentially break down for a retest of this sort of inverted head and shoulders neckline, right? So you don't really want to see real estate continuing to the upside if the market itself, the SPY, is going to see a stronger move off of this pullback. Utilities, same exact thing. Really strong breakout of this bull flag. That's okay. It's not the end of the world because the market has been pulling back. But if the market starts to move higher and utilities continue to scream to the upside, that's a bit more of a red flag. You want to see the utilities pull back as the market itself is moving higher because, of course, we know this is a defensive asset class, right? This is not what you want to see leading market rallies. Same thing for energy. It's kind of hanging out high and tight in this consolidation pattern like this. You don't want to see this breakout if this is all the pullback we get in the SPY. If the SPY starts to continue higher, make sure that energy continues to go sideways, if not slightly lower to cool off. If it does continue higher, again, more of a red flag that would say, hey, probably not the wisest decision to participate in this rally yet in the SPY itself. Same thing with consumer staples, more of that defensive sector. You can see it's been breaking out. You want to see this cool off, take a chill pill if the SPY is going to rally higher. If this rallies higher, and again, the S&P rallies higher, more of a red flag. Just keep it in mind, okay? Next up, XLV, third heaviest weighted sector that we're watching. This is something that we do want to see support the market move higher. And as of right now, we're getting a nice, beautiful break and retest. The question is, can we take out this pressure cooker top? 3 equal highs, roughly around 139 for trend continuation to the upside. That's going to be a good thing to see your S&P 500 move higher because of its heavier weight in that distribution. Next up is builders, really lightweight sector, not overly concerned with what's going on here. Bull flag activity. If it breaks out, sure, it's upward pressure on the SPY, but it's not really a risk on or risk off sector that I would be monitoring. XLC for communications, this is more of a risk on sector. It's heavier in terms of weight. It's more aggressive, right? As of right now, if this is your double bottom, you do want to see it remain above that neckline, which is roughly 68.50 just for round numbers sake. So if this hammer that was produced on Friday results in a bounce, fantastic. That's a good thing, a good indication that your SPY might have seen all the pullback it's going to get, right? And this would be one of those names that you want to see continue higher if the market is moving higher itself. Next up, we have industrials, just like builders, not the best indication or heavier weighted sector to monitor, but nonetheless at the sort of neckline of the inverted head and shoulders. Does it hold? Does it not? Again, not the best indication for the SPY strength or health overall in terms of the move. If it moves higher, slight upward pressure on the SPY. If it moves lower, slight downward pressure. Again, really lightweight sector, not overly concerned with industrials. Financials, this is definitely one that you want to keep an eye on as interest rates have sort of struggled. So let's actually quickly take a look at the TNX just to understand the context of this move. As the TNX has struggled at this long-term resistance trend line, right? This is coming from a monthly. Oops, we want a monthly. And again, we talked about this in the Wednesday video. I'm just going to reiterate it here. Really long-term resistance trend line, right? Coming all the way back from basically 2000. As we struggle there, financials are pulling back just a little bit off the midpoint of their range. So back down to the daily to see that actual move. Zooming in. Again, here's the range. Here's the midpoint. We did break down underneath the lows. The question is, we need to support, or ultimately to remain bullish on the market as a whole, we want to support at 37.54, some sort of higher low, confirming that we have a break retest back inside of this overall range here. And it does still keep in play the look below and fail target over the course of time is, of course, the top end of the range. So important to watch in the financials this week. Do we remain above 37.50? That would be a primary objective I want to see accomplished to remain bullish on this marketplace. If we start taking it out to the downside, a little bit more concerning. Keep an eye on rates as well to see how that continues to impact our financial sector. XLY for consumer discretionary, also a really heavyweight sector, more risk on. Nice, manageable little pullback here in terms of where we are in relationship to the double bottom neckline, much further away than something like communications that we just saw. So the risk here doesn't strike me as being as high of giving up this uptrend and reversal that is underway here. Ultimately, 179 is the level we want to see hold, and then breakouts can occur up and over this pivot right here around 192, 192.50. Okay, so XLY looks pretty good as of right now. Manageable little pullback that's starting to unfold. You have the numbers to watch. And then last but not least, possibly the most important sector of them all, XLK for our tech sector. Beautiful pullback. Hammers forming. We're above the double bottom neckline sort of idea from in here. That number, of course, is 154.50. As long as we're above that, fantastic. We have a break and potentially retest for something that does this. Notice also that these touches are much more exact than what we saw in the S&P 500. So if there is another equal high attempt at 163.70, I do imagine that that turns into a pressure cooker top. We're looking for that level to break and take us to our next daily structure around 170. That would be an incredibly bullish indication for the marketplace over the course of this upcoming week. Again, the hammer candle that printed on Friday strikes me as being bullish. The fact that it's above the neckline strikes me as being bullish. We'll see if we do get follow through, but as of right now, there's nothing overly concerning about this chart. Pullbacks in this marketplace do seem buyable as of right now based on the FOMO from the first leg, as we've discussed in last week's video and earlier on today. So that's a deeper look at our S&P 500. Quickly, we'll just round out the behind the scenes look with the VIX volatility index. What's going on here? Getting some price acceptance underneath. It's not really price acceptance, right? But activity rather underneath 2050, more of a risk on indication for the marketplace instead of seeing this spike back above as this pullback has started to unfold. That would be much more of a red flag. We're currently not seeing that type of activity, which again just confirms and reiterates the bullish nature of this reasonable pullback that we've seen in the S&P 500 as a whole. So hopefully that wasn't too long. It was in depth. Those are my numbers. Those are my thoughts. Let's continue along and go to our QQQ and take a brief look at our monthly, weekly, and daily, just like we did in the SPY. We'll speed it up just a little bit though. In this one, same sort of idea applies. Back-to-back hammers. This past month was green. That strikes me as a more bullish indication for all of the same reasons that we discussed on the SPY itself. Next objective is, can we take out those highs and make the equal high in here? We'll see. Ultimately, what we want to avoid is another, or not another, but a new lower low during the month of April. As of right now, I don't think it looks likely based on the response from the buyers both times on these wick lows. But we'll see, right? So those are my thoughts on the monthly. It needs to take out the highs, or at minimum, not put in a lower low. Looks like a likely outcome as of right now based on what we're seeing in front of us. Continuing along to the weekly time frame chart, very similar to the SPY itself, inverted hammer. Notice that it did take out these prior double top wicks in here as well. The head and shoulders wasn't as clean in the QQQ. Your neckline would have looked something like this. Nonetheless, failed move underneath, failed move underneath. Now that we have the equal, if not higher high here, I would say that pattern is not really in play as such. Let's continue. And again, the implications of this would just be, okay, from a location standpoint, yes, higher high, higher low, but from a structural standpoint, a little bit more bearish. Maybe there's just a slowing of momentum to the upside. Maybe we're due for a reasonable pullback, a little bit of consolidation, right? So drilling down to the daily now, talking about tradable levels into the upcoming week. What do we see here? Again, beautiful hammer candle that printed on Friday's session right off of prior structure. Again, extend that to the left. Nice double top from in here tying in as well. If we see the move higher, breakout point is up and over 371.50 for a rotation into this general area of the chart. Don't forget, and this is something that may go unnoticed for some people, that the QQQ still has a resistance trendline in place from here to here. The SPY does not. So don't just assume that this has to go back up to all-time highs. There is still possibility in the Qs and tech that we do come in for a reversal off of that trend line. I mean, don't get me wrong. That's clearly continuation to the upside. That would be a bullish move in the Qs. But just remember that as a potential target, okay? To the downside, what's my line in the sand in the QQQ? I would not want to see it underneath the double bottom neckline. Where's that roughly? I'm going to split the difference and call it 352. We'll quickly come in with the Fibonacci's just to see how that aligns. And at this point in time, it's nearly perfect with the 38.2. So anything that does continue the pullback, I would want to see something like this over the course of time, ascending triangle, higher lows, breakout point, then maybe we get into the resistance trendline. As of right now, this strikes me as a very mild, very reasonable pullback. All of the same psychological aspects apply that we discussed in the SPY, with the poor location longs leading to the spike to the downside. The recapture level that we want to see here for something that does that is this number right around here, 364.62. Back to the upside from there, I think it looks more likely than not if we get acceptance above that number. So that's the QQQ in a nutshell. Let's continue along and talk about IWM Russell 2000 and our small caps going back out to a monthly. Again, just staying very consistent here, keeping the analysis all the same. IWM rather, small caps, you can see have now failed 2 months in a row on the back test of the lows of the overall channel. We are getting that lower wick phenomenon where it does look like buyers are stepping up, and we are still well above this area here. So it's not like it was a break, retest, and then go. So as of right now, I mean, that does look fairly bullish on the monthly time frame, but it does come down to, can we get back above that level? Obviously, we know that it's 208 on the daily time frame. So let's just continue along. From the monthly, I would say on a bar by bar perspective, yes, higher lows, higher highs, and the long lower wick does strike me as being more bullish, but we know that this level is a thorn in the side even on the monthly time frame chart. Let's continue down to that weekly, see what we have here. Again, you can kind of get the sense that we have this weekly double bottom, tried to take out the neckline, no acceptance on that weekly candle, right? We did not close back above that neckline, or we closed virtually right on it. So a little bit more work to do in the IWM based on structure. This did not have as clean of a run taking out those wicks that we saw in our SPY and QQQ, correct? So continuing on down to the daily time frame, talking about tradable levels into the upcoming week, what do we see here? And do remember, by the way, that IWM is more of just a risk-on, risk-off indication for the marketplace, small caps being seen as the most risky sort of equities. You know, if these start moving to the upside, generally people are more willing to take risk, which would indicate that they're more comfortable with the larger names that ultimately drive the market. So that's just to sum that up in here as well. But anyways, in terms of levels, there's your 208. Notice how that we closed right on it for Friday. We are technically putting in a higher set of lows here, which does strike me as having to be slightly more bullish than bearish, but this fake break of the daily bull flag, and we've been talking about this in the Wednesday videos or even the secondary channel videos, this does strike me as being slightly more concerning. Like, why was it that we were not able to now hold above 208, noting that it was prior resistance, very strong in here? You know, why couldn't we get a break, retest, and then go for something like that? A little bit sloppy around that 208. So I'm not overly convicted that it needs to be higher or it needs to be lower. I really want to see at this point in time how this overall range right here resolves. It's kind of loose right now. It's kind of loose in small caps, to be quite frank with you. I wouldn't be overly bullish until we can clearly either get acceptance back in here or even take out that 212. And I wouldn't be overly bearish either unless we clearly give up 204. So those are my thoughts. Those are my thoughts on the broad market as a whole, really. Hopefully that in-depth analysis was helpful for the upcoming week. Let's get into these companies. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every single time a new video comes out. Kicking off our companies here with Apple, you can clearly see that we too are getting a reasonable pullback in the name, and we do have a hammer candle on Friday's session. Where is it happening? Right at an area of support as well, from in here at 172.65. So as of right now in Apple, the primary objective is, can we get back above the spike top, which essentially is 175.65. Let me illustrate that on a smaller time frame. Here's the 30-minute. There is sort of your spike where the selling steps in. Again, I think it's just cleansing the longs that got overly long, terrible location up at the highs. I don't really think it's stronger selling. Also, because we do also have that inverted head and shoulders phenomenon happening here with a close above the neckline on Friday. But if we can recapture that, the number once again is 175.65, higher low. Fantastic. I think we're back in the hands of the bulls essentially for higher. That would just be a reasonable pullback after a very strong and momentum-driven uptrend here and reversal, frankly, off of the lows. So that's the upside. Once we take out that spike top, that 175.65, look for the two-day highs up there around 179. And then really, it might be hard to believe, but we're basically at all-time highs inside of Apple after that. If we crack the Friday low, so here's a bearish example, because of course, this can continue to the downside if we do not take out that level, that 175.65. If we do something like this, reject there, and then come back down for an equal low, that would be equal low after lower high. Maybe there's some more pullback in the tank on a break of Friday's lows, again, roughly that 172-ish area. My line in the sand that I don't want to see violated is 167 in Apple. If we take out the fibs from the low up to the high, notice how roughly that's your 38.2, but more importantly, from a structural standpoint, it's the double bottom neckline. We ultimately want to turn prior resistance into support again, just like it was back around in here. So those are my levels and thoughts on Apple. Let's continue along, talk about Netflix. What do we see on this chart? Certainly a failed breakout. Okay, so this one's slightly more concerning, especially noting all of the damage that was done on the gap down from earnings. Nonetheless, here was your bull flag. Nice hammer candles that were stacked. We got the breakout, but there was absolutely zero follow through to the upside on day two. As a matter of fact, it turned into a look above and fail. Target of the bottom end of the range was achieved here. So I think Netflix is currently a patience play, considering that this short trade has ultimately come to completion. It hit the target, right? It's also a failed breakout, so I'm not overly enthused about longs. But we do know that this consolidation higher was more bullish than bearish, right? Obviously, if we remained underneath this level around 362, then that would be a different story. But I currently think that the play is patience in Netflix. We're going sideways through the support trend line through time. That's not an overly bearish indication. If we were to just crack it, so let's remove that, but you remember where it was, right? If we were to have just done something like that, that's obviously a much more bearish implication. It's not the case. We get a little bit of an indecision doji inside of the flag range on Friday. I think patience is the move. Either up and over the highs of the range once again, 382.75, to retarget this, 397. That could potentially be a trade, or short underneath the lows. Even then, I would be a little bit careful on the short side, to be quite frank with you. So let me reword that. If this does break the lows of the flag, that's fine. But for better shorts, I would wait for a sort of move underneath that level there. Once again, that's 362 roughly for round number 6. So longs up and over here, fine, just to target this. Don't overstay your welcome. welcome, and shorts probably only underneath 362.34. Patience in this overall range. I think there are better setups out there, better pullbacks to be buying instead of focus on Netflix, which is stuck in the range, right? Tesla is up next. Nice consolidation after holding the gap up, which is, if you've been watching this to the downside, it's very begrudgingly starting to move to the downside. Like there is no follow through to the downside whatsoever. It's very difficult right now to seem to get price action that wants to come into the gap and fill it. Doesn't mean it can't happen, but as of right now, my observation has been shorts are just not there in Tesla, right? No one wants to short Tesla right now. This pullback is very reasonable, very manageable. I believe they announced their delivery numbers over the course of the weekend. We'll see if that results in another gap one way or another into the trading week. Nonetheless, I think the play is quite clear. It's either long up and over the highs around 11.15. Remember, that is a bar-to-bar double top in there. That's a weak level, especially noting in here it's weak as well. If that breaks, the target's 1,200. And I do think Tesla can move higher here, knowing that it's such a momentum-driven stock, and there's really no selling activity that's taking place up here. Very, very hard to get this one to move to the downside and get anywhere close to the gap. So if it does move to the downside, I would not be trying to short it or time it early to get into the gap. I would wait to see acceptance in the gap first. So underneath 1054 before looking for shorts to ultimately fill it down towards 1022. If that happens, fine, maybe it's a short trade, but as of right now, I wouldn't be speculating by buying puts up here because, again, just based on intraday observation, it does not want to move to the downside right now. The sellers just really aren't there. I think people are accumulating longs or potentially taking some profit if they were long from down in here and potentially waiting for that next move. Okay, so Tesla wouldn't really look for the short side, maybe longs up and over 11.15 for that next target at 1,200. AMD is up next. What do we see in AMD? Obviously getting a downgrade on the Thursday morning session, leading to a significant gap down. So that gap is still in effect. It's from 118.65 on the top side down to 116.40 on the bottom side. We're underneath this double bottom neckline right here now with a close below on Friday underneath 110. The next really important level in AMD is just 100. Not only is it a psychological area, but we have numbers of instances of it acting as support in the past. Support, 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 support. So 100 is going to be a critical battlegrounds if this continues to the downside. And as of right now, with that close underneath this level and also the double bottom neckline, it does look more bearish than bullish. I have to put it that way. There's no ifs, ands, or buts about it. Also remember that on the way higher, it was really struggling to kick into gear as opposed to something like NVIDIA, also in the chip space, which just was screaming to the upside. So I don't really think people are enthused about AMD long right now. It doesn't mean it can't move higher, but I think that it's going to be harder to move higher. I think the next long setup would be if we put in structure down here for a double bottom, neckline, then start to target the gap overhead. If we put in a hammer candle, like something nice with a significant lower wick, maybe that's a better long indication. But as of right now, a little bit skeptical to the long side. Want to see how 100 resolves if we do get continuation to the downside. I wouldn't be chasing it short here either. So more like Netflix, AMD rather, is kind of a patience play, right? I want to see how this kind of resolves before making that next decision about it. If you think about it like this also, here's a range. Whenever you're in the midpoint of a range, generally that's not where your edge exists, right? Your edge really exists at the bottom or the top for either a breakout or mean reversion, and the same is true but opposite at the bottom, mean reversion or a breakdown. So enough about AMD. Continuing along, talking about Facebook, what do we see here? Reasonable pullback underway as well. What we want to see happen in Facebook is anything that's above 217 remains bullish. Remember that this ultimately is your double bottom. This was prior support, which then flipped to resistance. It was resistance for this bull pennant right here. As long as we're above that, we have a break, retest, and hold for something that could potentially continue back to the top of the gap, right? Over the course of time, this is really the next area that we want to see achieved inside of Facebook. Zooming back in though, currently, inside bar on Friday session, kind of getting sideways through time through the support trend line. Not the end of the world. It's also not a bearish implication. Remember, if it was more bearish, it would have smashed through and closed underneath through price, not sideways through time. So it's not the end of the world. Again, use 217 as more of that important marker. If it's going to be long though, I think the patience play is long up and over the 2-day highs here at 231.4. Just follow through to the upside. Remember that you do have resistance right here at 235. So that's probably an intraday scalp, and then monitoring for continuation into the bottom of the gap that we pointed out at roughly 278, we'll call it for round number's sake. So that's Facebook. Again, 217, line in the sand to the downside. If that breaks, a little bit more concerning. Maybe there's some room to move back down closer to 203.50. As of right now, the chart looks decent. The pullback looks healthy. Again, Friday's candle being an inside bar does not strike me as being overly bearish. Next up, we have NVIDIA. What's happening in NVIDIA? Clearly a different setup. Let's actually go to our levels chart. There we go. This is a deeper pullback and more more importantly, getting back down into this range right here. So what this is starting to present is the opportunity for something that could form like this. The question becomes, what happens now on the back test of 272? Maybe this is best illustrated on a 30-minute time frame. Notice that you have a range here, you have ranges up here. 272 needs to be recaptured, and we need to find a higher low off of it if NVIDIA is going to flip back to bullish. If we do something like this and then roll back over, it continues this phenomenon of lower highs, and then we would look for a break essentially of the neckline, because remember, this is ultimately that head and shoulders that I just drew on the daily. Break of that neckline at 258 should take us lower to 244. Let's see what that looks like on the daily time frame. 244 is down here, the big double bottom neckline. So could it afford to move all the way there? Yeah, technically it could, and it would still remain in an uptrend, noting that we have lows, higher lows. That could potentially be a higher low spot, something that does this. But overall, I would want to see it consolidate sideways through time, not necessarily lower through price, especially building out and respecting more structure on the way down means it's harder to move back through it to the upside, right? So to me, NVIDIA, primary level to watch, 272. How do we resolve it? Do we form a lower high off of it and continue lower, or do we recapture and put in a higher low off of it, something that does that, okay? So that's what I'm watching out for here. Numbers to watch on either side. 258 could potentially be the neckline of the head and shoulders that we just talked about. And to the upside, the top of this pattern is, of course, at 284.50, a break of that. You can see the range opens up a little bit to that next level, 312. Next up, we have Microsoft. What's going on in Softy? You can see a reasonable pullback, nice hammer candle that printed on Friday, much more bullish than what we just saw in NVIDIA. It's also right off of prior structure here. We have a weak level up around 315.80. If we can recapture that or make this move to the upside, I would watch for that to become a breakout point and take us to the next structure on the daily up here closer to 323. So to me, Microsoft looking like a much better name for a buyable pullback as opposed to NVIDIA, like what we just saw with that pretty weak close, right? On the Friday session back firmly in here, not as attractive clearly as Microsoft with the much better hammer doji and the possibility for a breakout point here at 315.80. So just compare and contrast, this is a name I would favor for longs, right? It's as simple as that. If we take out 305, again, that starts to become more concerning. It starts to become more like the NVIDIA chart where there's possibility that we do something like this. Again, there's your head and shoulders pattern. Your neckline breakdown would be at 299, 300, which we also know was the neckline of the double bottom roughly, right around in here. Much more concerning if that's how it pans out here in Microsoft. But again, the implications of Friday's bar would say that the buyers responded quite nicely, and we're looking for that rebound into the three equal highs at 315.80 and then breakout after that. So that's Microsoft. Last but not least, I know it's been a long one today with all those monthly charts and in-depth broad market analysis, but Amazon, last but not least, the beast, right? How are we doing on the daily time frame? Certainly a little bit of an indecision doji on the Friday session, getting into our support trend line, but is it breaking? No. Are we back down underneath the breakout point? Yes. 33.35. Is it a look above and fail? Maybe, but the support trend line's right here as well. I think patience is the play in this one as well, kind of being in the midpoint of this overall consolidation. If we can crack back above that 33.35, feeling much better about Amazon. If it wants to go sideways in here, that's fine. We are getting price acceptance above 31.76, so I have to give it the benefit of the doubt and say that our weekly double bottom, this pattern right here, is technically holding up. Again, if we're getting consolidation here, maybe it's turning into a weekly bull flag like this, but that's obviously not too helpful for intraday scalping, right? So over the course of time, if that's how it pans out, we'll wait to see how it resolves. Feeling better about it, again, up and over 33.35 for something that does this. Breakouts here lead to 3,500, also a nice psychological number, and we do not want to see 31.76 violated to the downside. Otherwise, that becomes more concerning that, again, this weekly double bottom right here is not holding, right? If we're back down underneath that, kind of a big failure. Let's actually look at it on the weekly just to illustrate that. Here's your range. We've been talking about it for weeks and weeks and weeks now. There's your weekly double bottom. If we can't hold up above that 31.76, much more concerning, right? Kind of like IWM, back down in here, just kind of sloppy and choppy, right? So that's what we've got in our core list of companies. Let's get into these trade ideas. Quick reminder to hit the thumbs up button, the subscribe button, the bell button, all of those buttons YouTube tells us to tell you about, and let's get right into these trade ideas. First one is on CLF for Cleveland Cliffs, big steel company here in the States. You'll notice that we have a very obvious pressure cooker top on our daily time frame with consecutive higher lows coming into it. If we can get the break of 33.33, let's call it just for round numbers sake, the true high in here is 33.34, but we'll give it the penny just to use all the same number. What do we have on the docket? Well, if we scrunch up the daily chart, certainly nothing in this this vicinity off to the left. If we go out to a weekly, nothing in this vicinity off to the left. What you'll find if you look at this chart is that you have to go quite a ways back before you can find prior structure in here. We're above this little pivot high. The next major area I can see is closer to 40 here on our monthly time frame. I'm not saying it can't find resistance sooner than that, but that's what we have from a structural perspective here on the monthly. There's some room to run is what I'm getting at on CLF. So if this wants to break out of the flag that's being put in here, fantastic. Just monitor for continuation into relatively uncharted territories. 40 may be the next major hurdle that we come into. If it starts to break this support trend line or just the phenomenon of higher lows continuing to form, I would not be as interested, noting that we've already seen, so here's leg 1, consolidation, leg 2, consolidation. If this one fails, then anyone who chased up here at the highs easily turns into overhead supply. Selling might take us back down to the top of the prior flag. So ensure that on this one, you do see the break first. You could wait for a break and retest and then go, or you could wait for a large momentum type bar that takes this out. It needs a little bit of confirmation, right, in this particular name at CLF, just based on how we've arrived at where we're at. So watch the level, but ultimately waiting for a little bit more confirmation in the actual break before speculating long on it. Next up, we have MA, a much more familiar name, I'm sure. MasterCard, clear area of balance, right? Going sideways back and forth in here. We're either waiting to take out the top around 368 to get into this next resistance up around 383, or taking out the lows, which are relatively equal, more equal than the highs up here. If we take that out, notice that there's a gap to fill underneath us down towards 350 even. So to me, beautiful setup. We know that balance areas have a number of ways they can resolve. We can break out and double the range to the upside. We can have a look above and fail, target the bottom end of the range here. The same is true, but opposite for the downside. We can have a break and go, fill that gap. We can have a look below and fail, target the top end. I mean, just a number of setups can be provided when you have equal lows and equal highs. So definitely keeping this one on my radar for the upcoming week. Again, that's MasterCard. The numbers 368 to the upside and 357 to the downside. Continuing along, last but not least, we have Shop. What's going on here? The beginning, certainly, of an inverted head and shoulders. If you want to look at it this way, your neckline break would be a little bit higher up around 800. You could look at it as a bull pennant in here, or you could look at it as a descending triangle. So ultimately, a number of possibilities with this setup as well. If we take out the resistance trend line, so boom, more conservative trader might just wait for the high break right here. Look left, you have some pretty thin structure on the way down. My first target would be the gap fill up around. If we switch tools quickly, we can map that out together. That's going to be roughly around 842 to the upside. And again, your high break in here is at 780 roughly. So a decent little range to be trading through right there. If you don't want to take that trade, if you're more bearish on Shopify, that's fine. You would wait for this flush point to break, right? As long as you continue to see lower highs develop, eventually, if this support breaks, look left, pretty thin structure on the way higher. I would just start looking for down around here, 567. So could it go either way? Yes, which is another one of the beauties of these particular setups. So for me, I personally would watch for this to turn into a bull flag and also for this inverted head and shoulders to pan out to the upside, noting that we have seen a pretty significant reversal in our tech sector, the QQQ that is, the S&P is moving higher. If the sort of market responds favorably to this pullback that we've seen over the past couple of days in the Qs and in the SPY, I would watch for higher in Shop itself. So that's sort of my edge here. But ultimately, again, who am I to say that you can't take the breakdown of these lows if you really hate the company or you don't believe in it, right? So do what you will with these setups, but those are my thoughts. That's what I've got for you this week. If you enjoyed the video or learned anything new, let me know in the comments section down below or by giving the video a thumbs up. Don't forget our secondary channel is linked down there as well. And all of that being said, I wish you a green trading week.